If you've ever wanted to know what a broken down growth stock looks like and what to do when you find yourself in one, look no further than Enphase Energy. What is going on, investors? Hopefully, guys are doing well out there. Time to pick up the story of Enphase Energy, ticker symbol ENPH. Year to date, shares of this company have absolutely been sitting on the sideline of the rally, down 44%. Stretch it out to a year's time, and shares of this company are down over 52%. That's despite we come over here and look at the financials, which we'll dissect on today's show. Still absolutely spectacular from a revenue and a cost control and a profit perspective. Why does this stock continue to go down and down? And we'll talk about some of the reasons and some of the ways to know when this stock is about to reverse. Now, the company reported their Q2 earnings back on July 27th. Revenue coming in at $711 million. That was 34% growth year over year. Still fantastic growth rate on the revenue side for this company, but it missed expectations by quite a bit. But that's not the full story. The company giving guidance for the upcoming quarter, and it fell way below expectations. Revenue seen between $555 million to $600 million for the upcoming quarter. So there's problem number one. We just put a quarter where we had $711 million in revenue. The next quarter is going to drop between $555 and $600 million. And the even bigger problem where Wall Street and investors were expecting $750 million of revenue for the upcoming quarter. And so this happens to be a consensus revenue estimate trend. And you can see it fell off a cliff like a waterfall. That's never a good sign. The 1 month, the 3 month, and the 6 month trend has Wall Street absolutely shaving the revenue expectations for the company, now down to $575 million. That would represent negative growth year over year. This is an absolute problem. As for the next several quarters, Wall Street is actually expecting revenues to contract year over year at Enphase Energy. So the once high-flying growth stock that was growing 30, 50, 60, 70% on its revenue side is now going to go in contraction mode. That is absolutely the number one reason and the primary reason why this stock continues to head in the wrong directions. On top of that, your earnings per share also likely going to head in contraction mode when you compare it year over year. Now, the company is fighting back a little bit. They bought back $200 million worth of shares in the most recent quarter at an average price of $159. Unfortunately, shares of Enphase Energy trading close to $140 at the current time. Now, the company did authorize another $1 billion of share buybacks that the company can do at its discretion, and management fielded some questions on the conference call that the company had after reporting earnings, wondering, well, maybe to reaccelerate your growth rate, instead of buying back the shares, maybe you can get out in the marketplace. There's a lot of companies in this business that are seeing their valuation absolutely be compressed. Well, Enphase Energy could be a buyer of those companies, but management seemed to balk at that idea. Now, when we get over here, the financials, they're still really good, okay? If this wasn't a busted growth story, if the growth rate hadn't been so sensational and driven up the share price, driven up the valuation multiple, well, the stock still would be good. So it's not all the stock's fault that Wall Street bid it up to a valuation that simply was not sustainable when that growth rate fell off a cliff. Management over this company probably could have done a slightly better job at telegraphing this, and that might have eased the blow as the stock continues to head lower. But it's still fantastic from a financial perspective. $711 million worth of revenue, gross profit coming at $323. The company's done a nice job controlling operating expenses, not just sequentially quarter over quarter, year over year, generating $170 million of operating profit off of that $323 million of gross profit. Flow down to net income and you get a number close to $157 million. But again, here's your problem: is the upcoming quarter will give them credit for the high end estimate at $600 million worth of revenue, we're going to assume that the company is not going to be able to shave its operating expenses fast enough. So not only are your revenues going to decline, but your net income and operating profits also likely going to decline. I don't anticipate them turning negative because this company still does a nice job with all of those things, but certainly long gone are the days of the high growth rates at this company. From a balance sheet perspective, there's nothing really to be overly concerned about. Company has plenty of cash sitting on the balance sheet. They do have elevated inventory that probably will keep margins under pressure as well. Gross margins anticipated between 42 and 45%. Also disappointing Wall Street as, again, inventory levels tick up and demand clearly not where it was expected. Company does sit on about $1.2 billion of long-term debt, another $93 million there on the current side. Nothing to be overly concerned about. When you come over here and look at cash flows, company gets to add back in stock-based compensation, a depreciation line, an accounts payable, warranty obligations, and some deferred revenue, and they generate this very strong cash flow on a quarterly basis at $269 million, even as you reduce the margins, even as you reduce the revenue number that the company is going to pull in, they still should produce very significant operating cash flows. Not a heavily capital intensive business, just flowing through $44 million in the most recent quarter, although it is quite a bit more than they were a quarter ago at $22 million. And here's your share buybacks at a pace of about $200 million. We'll see if this company steps in and continues to shore up the shares of the stock as it's continue to go on a slide. Now, based on my PayPal video that I posted yesterday, some of you guys view a price chart as voodoo or something that you're not supposed to look at. I think you guys are used to, like Jeremy Lefebvre and Graham Stefan recording videos in front of their, $100,000 sports cars and never showing you these types of things. But the bottom line is this is simply a price chart. Take Enphase Energy off of it, take any emotional attachment that you have to this company, and just view this as a price chart, maybe of condos, maybe of Nike shoes, maybe of a refrigerator, maybe of a cell phone. And is there anything right here on this price chart that shows you that it is going to do anything other than what it's been doing over the past year and a half, and that has been going basically straight downwards? Right now, there is almost nothing to say that that won't happen. Now, we are at the bottom of the channel. When you're at the bottom of the channels, you tend to have rebounds to the top of the channel. Wouldn't surprise me one bit if Enphase Energy does catch a bid over the next couple of days, has a small rebound to a top of a channel, only to meet resistance there and continue to move lower until this pattern, which has been in place for a while now, until that pattern reverses itself. You have to assume that it's going to be in place. There are some areas of support down here where the stock has bottomed multiple times back in January and also back in May of 2021. That is down here at about, we'll just give you a round number, about $115 per share. I wouldn't be very keen on buying Enphase Energy if it continues this pattern of another lower high and then comes down here to 115. Wouldn't be wildly excited about buying a stock in that steep of a downtrend. If for some reason you feel like doing that, I would have a stop loss shortly underneath the 115 area. Because again, this is a busted growth stock. The pattern that it is making here, where it had a monster rally and then essentially sideways consolidation. What does it look like? One stock that comes to mind is you look at a square, otherwise known as Block. Almost the exact same formation. Block went on a monster rally, sideways consolidated. Once you broke through the sideways consolidation area, you went from 192 down to where shares are right now, at about $63 per share. There'll be people in the comments that subscribe to a lot of these channels on YouTube that never tell you about risk management, never tell you about a stop loss, and quite frankly, the vast majority, what you have to remember, is the vast majority of people that invest in individual stocks lose money. So you have to assume that almost everybody in the comment sections of my videos loses money in the stock market. And it's because, number one, they take advice from terrible, uneducated people here on YouTube. Number two, they don't use stop losses. Number three, for some reason, they don't ever look at the price chart of a stock and understand momentum and technical patterns, even when they are very much apparent. So if you are going to buy the dip in Enphase Energy, you absolutely need a stop loss somewhere below 115. I would not make it lower than $100 per share. If you break through $100 per share, this stock chart will look darn near exactly like Block or Square or the stock that we were looking at yesterday, and people flipped a lid when I said I wouldn't step in here and buy this stock. That would be PayPal. All of these stocks are busted growth stocks. Enphase Energy, if they are not able to reignite their growth rate, this stock will look exactly like Square and exactly like PayPal in the coming months. You do not want to ride this from 140 all the way down to the 30s. Nobody posts stuff like this on YouTube. Nobody is telling you stuff like this on YouTube, but I will have news for you. Nobody that you are watching on YouTube actually makes money buying and selling stocks. They make money on ads, make money on clickbait, and they make money on courses. They don't make money on the stock market. If you want to make money, you need to understand this technical pattern. You need to understand your risk, and you need to understand that you need to have risk management. If you're going to get into a absolute busted growth name, that is Enphase Energy. Still a fantastic company, generating free cash flow. They're able to stabilize this revenue growth. Shares of the company should recover at some point. Hopefully you guys enjoyed today's video. We'll be back in soon with more. Good luck with your investments.